Hey everyone, Jason Klink here, and today I wanted to talk about investing in multi-occupancy properties. The difference between investing in a small multi-occupancy property such as a 2 to 4 unit versus investing in a large multi-unit occupancy that may be 8+ units or more. Investing in real estate can be a great way to build some wealth, some passive income. One of the most popular forms of real estate investment is multi-occupancy properties. These are buildings that contain multiple residential units for rental purposes. However, the size of the multiple occupancy property can greatly affect the investment strategy, the returns, and the risk factors that are involved. In this video, I'm going to discuss the difference between investing in that 2 to 4 unit multi-occupancy and that 8+ unit multi-occupancy. So investing in that small 2 to 4 unit multi-occupancy, such as a duplex or a triplex, it's often a good choice for a real estate or a first-time real estate investor that may have some limited funds. Small multi-occupancy properties offer several advantages, including some affordability. These properties are typically less expensive to purchase than those larger properties, making them more accessible as an investment option. Being able to manage them is easier, managing the day-to-day, the maintenance that comes with these type of properties, and to be able to keep it up to date is a little bit more manageable. You have the flexibility of these properties to offer a great deal of flexibility in the terms that are used, the financing that is used. For example, a duplex can be used as a rental property, or one unit can be used by the owner while renting out the other side and ultimately helping pay your mortgage. However, investing in these small multi-occupancy properties also comes with some disadvantages. You get lower returns. Typically, you get a lower return on your investment, even though you are able to generate some type of income. There's higher risk. These properties are more vulnerable to market fluctuations, economic downturns, and there is less income generated with fewer units. Now, with the large multi-occupancy properties, those 8+ unit properties, investing in these, such as an entire apartment building, an entire condo complex, it comes with some advantages. There's higher returns. Typically, these will generate higher returns compared to those smaller properties. But with that also comes that higher investment. Investing in these multi-occupancy or those large multi-occupancy properties provides a diversification of your financial portfolio, as the income generated from these properties can mitigate the impact of a vacancy. So with the smaller ones, if you have a vacancy in a 2 or 3 unit, you're losing more money than having one vacancy in a 10 unit property. Large multi-occupancy properties often come with professional management services, which can greatly simplify the investment process and free up the time of the investor. You have less hands-on when it comes to managing the property. Some of the disadvantages for those large multi-occupancy properties, they can be very expensive to purchase, may require a certain type of lending to be able to purchase, and it's usually a typical large investment up front. Investing in these large multi-occupancy properties can be a lot more complex, a lot more time consuming than investing in those smaller properties. Typically, if you're just starting off, like I was saying earlier, if you're just starting off and you're a brand new investor, these large properties may not be in your best interest. They require more time and more effort in order to manage all of the units and maintain them. Investing in those large multi-occupancy properties comes with the higher degree of risk. Property is more vulnerable to those market fluctuations, economic downturns. Property value and valuations are very determined on the financial stability of the current environment. So in conclusion, both small and large multi-occupancy properties offer their own set of advantages and disadvantages. The best investment strategy will depend on the investor's financial situation, their goals, and how much risk they can tolerate. It's important to carefully consider all the factors involved before making a decision to invest in one of these properties. Work with a financial advisor, work with a real estate professional in order to get all of the information that you need to make an informed decision on your next multi-occupancy property investment. If there's anything at all I can do for you, if there's any questions I can answer, please don't hesitate to reach out. Your questions are free and so are the answers. I'd be happy to help at any time. Have a great day.